Welcome back to Money with Mission, everyone. Today I have TJ Van Gerven, a certified financial planner. Theodore Joseph, or TJ, is a financial advisor and planner and the founder of Modern Wealth Builders. He's also the host of the podcast, Do More with Your Money. After graduating from Virginia Tech, he has spent his entire career in the financial services industry as a financial planner. He is passionate about helping millennials use money intentionally as a tool to build toward financial flexibility and independence. TJ also enjoys, outside of his work with financial planning, practicing Muay Thai, listening to audiobooks, hanging out at Martha's Vineyard with friends and family.
Be the change you want to see. Make a difference by giving your money a purpose, a mission to do good. Welcome to Money with Mission, where we show you how to create passive income so that you have options for how to work and how to live your life while leaving a legacy of positive social impact.
Hey, TJ, thank you so much for joining me today on the Money with Mission podcast. I'm looking forward to this conversation.
Me too. Thank you so much for having me on. I'm looking forward to it.
So I know you got a lot going on. I want to put out there right up front that you have your own podcast. So if anybody's looking for more podcasts to listen to, let's talk about that. What is the name of your podcast?
Yeah, it's called Do More with Your Money. It basically started off as me doing just like short monologues on different planning topics, but recently it has evolved into bringing on experts and talking about their area of expertise. And it's just all about how can you do more with your money? That's really what it's all about.
All right. And it sounds like you are like me, and I just want people to have the conversation. Just start talking about money and let's get it out in the open so it becomes much less of a scary topic. Because for a lot of us, like I listened to one of your podcasts where we talk about the anxiety and fear that people have around money. Even if they're making plenty, we still have that kind of scarcity mindset, a lot of us, around getting there.
100%. Like I love the technical aspects of money management, investing, personal finance. But at the end of the day, the more you do this, you realize that there is such a, like you said, huge emotional and like psychological component. So yeah, I just love having conversations around money. And again, trying to break through that kind of scarcity and having more of an abundance mindset that there is enough out there for you and that you can use money intentionally.
Yes, yes. How did you get to this place where the technical and all the things you just said about what you like about money, how did you get there? Were you come out of and just came out talking money, or
That's a great question.
how did you get to this place?
That's a great question. My dad was one of 6. His parents were Dutch immigrants and his dad passed away when he was very young. And so he grew up in poverty and very much had to deal with that scarcity. And so he always talked to me about money growing up. I've always been into math and things like that. And so I just went down this path of I studied economics and actuarial science in college. And I just wanted to learn, like, how do you use money? How do you build wealth? And like the actual like fundamentals behind that. And I've just been I'm a lifelong learner. So I've just kept learning after college and basically through, self-study and just learning through case studies and on the fly, you start to learn like what works and what doesn't.
You'd said your dad talked to you about money. And I think that's the big thing. We get our ideas about money really much younger than college. And it's that your dad talked to you about it. And many of our families don't talk about money. We get all our information about money in a subliminal kind of way. You get this kind of, there's not enough. No, you can't have that. What do you think? Money grows on trees. All those kind of sayings that we get in our childhood that can lead us to that scarcity mindset. So that's amazing that your dad, even though he grew up without money, was at least able to see the importance of talking to you about money, whether he realized it was important or not. But that got you to where you're not afraid of it and can start looking at it and understanding it a little better. That's really good.
100%. I will say, like, I wouldn't say it was like always like the healthiest way, because again, he had a lot of scarcity around his own money, and he was very into real estate. Like that was his comfort zone because he was a blue collar guy and he could like build houses himself. Like that was his main way of kind of building wealth, was like buy land and literally build the house himself and build that sweat equity. Yeah. And it works, but it is a lot of work, and you don't necessarily factor in all the things like your time and the transaction costs associated with that. So I obviously went down a little bit different route with getting more comfortable with like the stock market in general. And so it was just something that like I wanted my dad to be comfortable with money. And so I wanted to learn how to help people with money.
Got it. So you are a certified financial planner. You have your own practice where you're helping people, and your target audience is millennials. So it's that, I always forget what age group is what, like Gen X, Gen whatever, all that kind of stuff. But the millennials are up to 40 something now.
Yeah, I would say mid 40s is like 30 to 45 is the range that I work with. Yeah.
All right. All right. And what kind of, so we're talking to medical folks, professional people of all ages in this conversation. What we're talking about definitely pertains to everybody to some degree. So learning is, like you said, lifelong learning is like the key to everything. And you guys know I talk about you don't know what you don't know. So that's why I love talking to everybody. When you get a new client, what are they coming to you for? What gets them to their point of, I need to talk to somebody, not just my accountant on April 14th when I'm giving them my tax stuff, or not just or doing my own taxes. What gets them to talking to you?
Yeah, that's a great question. So I like to think and say that there is a DIY expiration date for some people. So they get to a point where they just don't want to dedicate their time, talent, or energy to doing these things. It's not necessarily that they can't do them on their own, but maybe they are busy focusing on their career. Maybe they have young children, and they're literally just looking for a partner that can actually take some of like the actual logistics off of their plate and ensuring that things are being accomplished. They also want to know what they don't know. So they're smart enough to know that, hey, maybe I'm not an expert in this area. And so there could be some things I'm missing out on. A lot of times it's tax planning situations that people come to me for. I have like kind of niched down over time to focus on working with people that receive equity through their company. So part of their compensation is receiving stock. And there can be some, especially if you work for like a more of a startup type situation where you have stock options, there's some specific tax planning stuff there that can bring them in. And then basically, what do you do with that money after? And just developing an overall financial plan of like, here's what we're building towards. Are we on track to that? And then a lot of times quantifying trade-offs is a big thing. So right now, especially for millennials, a lot of times they have this preconceived notion or that they want to buy property. They want to buy a primary residence, and they want to understand the long-term ramifications of like, hey, what can I truly afford in this interest rate environment? Does it make sense, buy versus rent? That's a common one. So those are a handful of things that leads people in.
Okay. So those are amazing things that a lot of people are actually realizing, that these are questions that they have, and that I want people to get out of the DIY mindset, because again, you don't know what you don't know, and having people on your team. We are good at our thing. What you go to school for, what you do on a daily basis, you are good at it. You are amazing at it. But knowing the tax code and knowing how to decrease your tax liability, knowing what TJ was talking about as far as when do you take your stock options? Should you take your stock options? Should you ask for stock options if nobody's offering you? All those kinds of things are important, and having somebody to talk to about that besides your mom and dad and spouse, those folks can help you look at the bigger picture. And that's the important thing. We can all do our own taxes. Don't do that anymore.
That is a big one.
Right
I'm encouraging
Stop
people
it right
to
now. I promise you are missing something. And our taxes, I preach this, biggest expense in your lifetime. And we spend more time budgeting our cell phone bill or budgeting all the other things that are minor, and never think about our taxes. You just toss it out the window every time. Anyway, that's
very well said. Your biggest expenses in your lifetime for most people are going to be your taxes and your housing, right? And those are the two things I just mentioned. And I love that you also mentioned, like, a lot of times millennials will say, well, my parents said this, or my friend or my coworker said this. And it's like, that's great. But like you said, not everybody can be an expert in every field. Like I said, I work with very smart people in their field. If they had chosen to be a financial planner, they would have that expertise and knowledge, but that's why we all choose to specialize in what we do. And there's nothing wrong for looking for outside counsel. And there's a book I read recently called Who Not How by Dan Sullivan. Really great book.
Yep.
And it's just basically about like, you want to find who can help you, not how can I do everything myself.
Because like you said, because you don't have time. What are you giving up? That's the one thing to think about. What am I giving up to understand the tax code, to do my taxes? And then another thing I talk about is value versus cost, because I have so many people say, I don't want to spend the money for that.
Yeah.
I get it. I do. And how much is it actually costing you? So what's the value of spending that money on that thing? I guarantee you a tax planner and an accountant that can help you with wealth management, all those kinds of things are going to be worth the money every single day. I just
Yeah, and
guarantee.
it does 100%. And it doesn't mean that like you shouldn't hold them accountable and you shouldn't verify that and you shouldn't pay for transparent, advice. But yeah, that does come back to that scarcity mindset of like we're not willing to give it up, but we're not seeing the return on investment potential. And we're also not seeing, as you start to build your net worth as well, the consequences of very small decisions can have very big ramifications. And so you don't want to be short-sighted to try to save X amount of dollars and then cost yourself a multiple of that.
Yeah. Yeah.
Yeah.
Definitely. I've done it. It's like, okay. And it was even with I learned out they were more of a technician. They weren't somebody who was really looking at my big picture. But like, I want to do this. A year later, well, you got to pay taxes on that now because you did that. I'm like, why didn't you tell me that? Well, you
Yeah.
have to ask me. I hate that. Anyway, okay. So talk about those folks that come to you that are just finishing their schooling. And we know how much college is these days. And many people are walking away with lots of debt, especially who go to professional schools. They may have 6-figure debt walking out of there. And
Yeah.
that is just, they even delayed the rest of their lives some more from their professional school, paying all that down really fast. How can people live with their debt and still get their debt paid off? And does that make sense? They're still living
Sure.
the life they want to live. They delayed gratification for so long. Let's breathe a little
Sure.
bit.
Yeah, it's hard. I do challenge people to live for today. I think it's good to take a longer term view again on your money and that you are going to have your earning potential over time is going to increase, hopefully, right? And so it's okay to, at times, borrow from your future self. Now, that doesn't mean that you shouldn't have a good plan in place. The student loan debt is a huge problem for a lot of people. And the first step is always awareness, right? Like understanding your numbers, understanding basic cash flow, right? What's coming in, what's coming out, and then developing good habits. Now there's seasons of life where you may not always be able to live below your means, and that's okay. But the key is that are you being aware and are you continually coming back to keeping good habits? And the number one thing is, are you living below your means? It's not complicated, but it's not necessarily easy. And so how can you learn to live below your means? Again, the first thing is understanding your cash flow and then just being intentional about, can you automate? How much do you want to put towards debt repayment? Now, you can start to get into the technical aspects of, well, what is like my interest rate on my student loan debt versus what's the current interest rate environment? What am I getting in like a short-term treasury bill or my high-yield savings account? And maybe that can modify some of your decision making. But basically, you just want to have awareness and then focus on automating as much as possible in the beginning.
I cringe, and I can imagine other people cringe about living below your means because
Sure.
especially knowing I came out of residency and I was like, yeah, I lived below all the means for a long time, not financially, but what I thought I was going to do. And now you still want me to live below my means? Talk about that a little bit because I remember getting out of residency and I just want to buy a house and I want to have kids and I want to do this and I want to do that. And all those things didn't necessarily fit into that. We did fine. They did. But if you look at it and just say, oh, I can't afford to have kids right now because da 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 da.
Yeah.
Just walk through how some of those things actually can work. And what I heard you say is have a plan. If you know your long range plan, you can make a lot of things work into your life.
Yeah.
And
So I would say in the specific instance of physicians, right, going from residency and having maybe your income increase from, I don't know, like 75,000 to 500,000, whatever it is, that's a pretty unique situation. And in that situation, you can't afford to upgrade your lifestyle a lot because you just had a big increase in income. But again, you still want to run the numbers of like, if you're going to make these major purchases, especially with the house, right? That's the big one because anytime you make a house purchase, you're increasing your fixed expenses. So you're tying yourself to a certain level of income that you now have to earn. And so that's just a question you want to ask yourself is, do I want to tie myself to having to work and make this level of income to hold on to this property? Because I think a lot of times people really just want peace of mind and freedom.
Yes.
And the best way to achieve that is living below your means.
So that's amazing statement right there, because one of the first questions is, what do you value? What's important to you? And if having a big house is important, great, do that. If having peace of mind and knowing that you could walk away from a job is important to you, you might make a different decision than buying the house that fits whatever the bank or mortgage company said you can afford to buy. So I hope that makes sense to you guys. So we can have what we want. It's a matter of what are you giving up for that, and how do you want to live, and what do you want to be handcuffed to because you made that decision. So that's just having someone like TJ, a certified financial planner, who's looking at your big picture and reminding you of what you said you wanted can go a long way to getting you to what you wanted.
100%. I tell clients that you can have anything, but not everything, right? So tell me what you want. Only you can determine what you want. But a lot of times I think they've been programmed into thinking they want certain things. And that's the hard part. It's just taking a step back, pushing out the noise of what you really want. And then we can start to allocate your resources. We can develop good habits, and we can focus on all the technical stuff you should be doing.
Yeah.
But then it's like you said, it's all about trade-offs.
Yeah. Having that big picture in mind and having somebody on your team that can help keep that big picture in your mind when you're down in the weeds on a daily basis is really important. And I say my saying is a little bit different. You can't have everything all at once.
Okay.
Have everything you want, just not all at once.
I like that. Yeah.
Figure out what you want now and go for that. That's just my thing. I'm a big proponent of passive income and having money coming in from someplace other than your 9 to 5 or 8 to 8, whatever. Most of us are way more than 8 hours a day these days. So how do you help people, if you do, work that into their investment strategy or into their financial strategy?
Yeah, it's a great question. I do want to push back a little on the passive income thing, because I do think it gets thrown around a fair amount, because there's different ways. I don't know much that's truly passive. Okay. I will say, if you're investing in the stock market, I think the great thing about today and the technology we have, we can do things like buying fractional shares, meaning that we can do commission-free trading, buy the world's greatest companies with very little capital. There used to be a lot more barriers to entry. Like even 20, 30 years ago, you'd have to actually go through a stockbroker, pay a commission, and you might have to have a minimum amount of money to invest. As long as you have a little, you can open an account at wherever, Charles Schwab, wherever, E-Trade, and you can start automating your investing today to own the world, access to the world stock market, which is a way to at least keep the value of your hard-earned money. That the harsh reality is that inflation is constantly reducing the value of what you earn, the value of what you own. And so if you're not consistently taking your income you're earning and buying assets that can at least keep up with inflation, you're actually just losing value over time. And so whether it's real estate, whether it's the stock market, those are the two primary ways that people retain their wealth. You just have to get in the habit of automating. But for somebody who doesn't have a lot of money, you can start literally just investing into, I like the world stock market, literally like just a index type fund that owns everything. And that is going to give you an ability to build some form of wealth. And as long as you're consistent in doing it over time, you can actually build a meaningful amount of wealth.
Okay. The other thing I notice about when I start putting money to something, I start paying attention to it. I start learning more about it. And that helps me be able to even invest more. So that's how I was with Bitcoin and cryptocurrencies. It's like, okay. And I missed the long road. I just started. But as soon as I put some money in there, I'm just paying attention to that. I'm learning more about it. I'm looking at it more, trying to figure out the hows and whys of it. Just stock market, whatever you put your money into, I believe you will pay attention to and learn more about.
100%. And I'm happy to talk about Bitcoin because I am a believer in long-term Bitcoin. But what I would say is, to your point about the passive income, I just like to rethink that a little bit, because when you're owning like the stock market, for example, or Bitcoin, you could even consider that passive income to an extent. If it's going up in value over the long term, and then you're selling it and having some, therefore, income that you can use, it's a total return approach, meaning that it's not like generating like a rental income stream, but it's still a passive source of income in that regard.
Yes. Yeah. Yes. So if you have an asset, so I look at that as you're buying an asset for appreciation and for cash flow. So when I talk about passive income, I'm talking about real estate. So I like to put money into real estate because it tends to hold value over time. And it's even better when it's cash flowing and putting some money in your pocket on a monthly basis. I don't advocate doing it yourself because that's not passive. That's a job. I want to work with operators who are doing it. They have a whole team doing it. We invest with them. They make the whole thing work. That's how I talk about passive income. So while you had to put some upfront work into it to figure it out and understand and meet this person and know what they're doing, know what they've done in the past and understand all the numbers of what they're doing, that part's not passive at all. But once you decided to put your money in there, now you sit back and wait for the returns. That's what I mean. That's when I'm talking about passive or dividend returning stocks and that kind of thing. So
that's fair. But that's where I push back with the dividend returning stock. So I want to push back there a little bit, because the problem with just focusing on dividends, and in that example, is that it's all the same thing. When you're getting a dividend from a company, they're just returning capital to you from the earnings that they're making, but you're taxed on that dividend. Whereas a company that they could pay you a dividend, but they reinvest in the growth of the company, that share price appreciates over time. Let's say you got the same return, but you didn't have that inefficient dividend come out to you. So
unless you have a plan for that dividend. So there's just more planning. This conversation, because we can just keep going.
Sorry. Yeah. I just get triggered by the dividend thing, because it's like, at the end of the day, all that matters is your return after fees and after taxes. That's all that matters.
And there we go back to taxes. Having a tax plan, what you're doing with your money is like, how am I going to do this in the most tax efficient way? And as a physician, as a lawyer, we don't know that. We can read about it. You could spend your time trying to figure it out and understand it, but why? Why do that? Hire somebody to help you figure out the best way to put your money to work for you, the best tax efficient way to put your money, however it is, whatever you love. If you love the stock market, go to stock market. If you love real estate, go to real estate. Doesn't matter. I want us to have the conversation. I just want everybody talking about money so that we can make it not so scary.
And I want to put out there a really great resource. If somebody's looking for an advisor, because it's not to plug my services, there's a website that recently came out. There's a personal finance club from Instagram, if you're familiar. He's a really good guy. The website's hellonectarine.com, and it's $150 per hour. They will match you with an advice-only financial advisor. Advice-only means that they do not manage money. They do not sell products. It is just purely advice only. So if you're just looking for a little bit of advice, like, hey, I don't know what to do, it's very straightforward, and they'll match you with, there's a whole option of different advisors out there.
And that's $150. And the hour you spend with that person, or if you spend an hour with them, you pay $150.
Yes, which might sound like a lot, but it's actually a great value.
Great deal.
Yeah.
It's a great deal.
Especially if you're only looking for a little bit of help, like, hey, I just need an hour or two to like get on the right path. Whereas you probably wouldn't be like a lot of advisors you go to, they'll have like minimums where you have to have $1 million of investable assets or something like that. So this is a great option for those that want some advice but can't afford like an ongoing type of relationship.
And it's also a way to, in my mind, almost interview somebody, because they're not there to sell you. They should not be there to sell you something. They're there for you to ask questions and get an understanding, and they should be asking you questions back. There's no way you're going to ask a question they can give you an answer without understanding more about you. So you can get a sense of what it's like working with someone on your team. And then you see, okay, that was well worth $150. Let me get somebody on my team all the time that I can follow with. And then you're ready. You're off to the races at that point.
Exactly. Yeah. So that's the great thing, is that there are more options. That's like giving more accessibility to people that historically didn't have access to those types of resources.
Say the name of the Instagram again.
It's hellonectarine.com is the platform where you can go. It's advice only. It's just like they'll match you with an advice only financial advisor. And the Instagram is Personal Finance Club. It's a really good, he's got a lot of followers, and it's a really good, if you're looking for, there's a few financial influencers that I really enjoy. He's one of them.
And he's not associated with Hello Nectarine, or he is?
No, he is. He's the founder of it. Yeah.
Okay. Got it.
Yeah.
And that's a big thing, you guys. If you go to Instagram and you're listening to somebody talk about finances, that's great overall information, but you need to get to somebody who's going to help it pertain to you. So that's
that's a huge thing.
Learning is personal. It's really personal.
Yeah, I think one thing that's hard for people to understand is like when you hear somebody speak on like CNBC, for example, or something, like they are there to entertain you. And while the information may be useful in some cases. It may not pertain to you at all. So you always want to be careful. Any kind of advice that is not personalized to you, you should definitely take with a grain of salt and do your own due diligence.
Yeah, 100%. So get all the information you want and then go to Hello Nectarine.
Yeah,
Get an appointment. Ask them if that pertains to you. That just
exactly.
don't go implementing a bunch of financial planning that you haven't really had a really, really good look, even if it's just a one-off conversation with somebody. Do please do that. This is great. How can people get in touch with you, TJ?
Yeah, modernwealthbuilders.com. Everything you can learn about me is there. I'm on Twitter at TJ Van Gerven. Same with LinkedIn. And those are the main places.
Okay, let me ask you this too. As a certified financial planner, are you paid by the hour? Are you paid by the transaction? How are you paid?
Yeah, so I do a fixed fee. So I just quarter to quarter, a fixed fee. It starts at $1,500 per quarter. And that's it. And that includes everything.
Okay, perfect. So I know that there are a lot of different ways that people make money during doing financial planning. And I know that a lot of people are afraid to ask that question up front. You're like, how do you get paid?
Yeah.
And that's an important question to ask every single time so that your person's getting paid.
And if an advisor can't tell you in like dollar terms, to me, that's a red flag. Like, yeah, you can say like, oh, it may sound like a lot to you, like whatever, 6,000 per year is my minimum. I can tell you that's a pretty, like, I built my practice to be as value oriented as possible. And I want to be like any other profession. When you hire a plumber, they don't say, oh, you going to pay me a percentage of the value of your house to fix your sink, right? They say like, here's how much it costs. Yeah.
And if they don't tell you how much it's going to cost up front, you don't work with them, do you?
Or if they say it's free, that's a big red flag. A lot of times, like
free, and every time I come back after that, it costs a whole bunch more money.
Yeah, or you're paying the company, right? You're not paying me, you're paying the company, but there's all these commissions built into the insurance products. Just to give you an example, I've worked for these companies before, but like you could walk into an office and buy an annuity, for example, right? Let's say you saved up your whole career, you had $1 million in a retirement account, and you get sold an annuity. In 30 minutes, there can be that $1 million annuity could be like a 7% upfront commission. That's $70,000 for like 30 minutes work. And so it's just the transparency is the big thing. That's all, transparency.
I love it because I don't think we always think about that. We don't think about it should be transparent how much the person managing your money is getting paid and where it's coming from. Ask the question, you guys. If they can't answer it and you understand it, red flag, move on. It's just that simple. TJ, thank you so much. This has been really good. We're going to have TJ's information in the show notes. Do more with your money. That's your podcast.
Yes.
Do more with your money. Who doesn't want to do more with their money? So get that. And there's a lot of short, quick in his podcast, just talks about money so that you can just get a better understanding of what's going on and just to start the thought process about money. Yes, we think about it. We always think we don't have enough, but just getting a little bit different thinking around it. What I don't know, I don't know. That's just as much as it makes it less scary.
Absolutely.
Way less scary to start talking about it. Thank you so much, TJ. It's been fun.
Thank you so much for having me on. This is great.
All right.
You've been listening to Money with Mission. There are projects happening right now where you can have a great financial return while positively affecting the lives of others. To learn more about our opportunities, go to moneywithmission.com.